Yes. Good afternoon, everyone. Good morning, good afternoon, wherever you're joining us from. Welcome to yet another edition of uh, Business Conversations, where we have conversations surrounding a particular topic to create more awareness on that particular topic. And today, our guest is Dr. Hilary Akhaabi. But before I introduce him and add him on the stage, first of all, I want to say thank you very much, sir, for being part of this. He has been at the backstage quite early. Thank you so much, sir. But we have a culture, the association of African startups. We start everything with a word of prayer. So please just join me for a short prayer. Father and our God, we thank you, ancient of worship you. I am that I am. We ascribe all glory, all honor, all power, all majesty to you now and forever in Jesus' name. We ask Heavenly Father that you take control of this conversation in the name of Jesus. And at the end of the day, let your name and your name be glorified. In Jesus' name we pray. Amen and amen. So I'm just going to quickly read. Sorry, please hold on. Trying to. Yes, I'm going to quickly read Dr. Hilary Akhaabi's bio. Dr. Hilary Akhaabi has over 20 years of experience in finance, economics, risk management, applied in multiple sectors across finance services, payment solutions, banking, customer packaging, goods, and education. This has been achieved in corporate world at American Express for 17 years, where he managed portfolios worth over 50 million US dollars, as well as startup he founded and still remains an integral player in its strategy, which is Go Africa Global, with significant growth opportunity and has raised over $2.4 million in 3 years. He possesses multiple degrees, including a PhD in finance economics, master's in risk management from NYU, as well as an MBA, and bachelor's in finance and economics from the Northern Arizona University. His biggest motivation is fostering development in the societies and groups that he works for to ensure that there is a clear understanding of financial economic concepts, including resources that are scarce and must be allocated effectively within a finite time frame to achieve maximum results. Please join me as I add him on stage. Thank you so much, sir. It's so good to have you here. And today we are going to be discussing what cluster distribution means and how to cluster markets. Good afternoon, Dr. Kim. Have you been? I know it's morning at your time.
Yeah, it's morning. It's morning. Good morning. Am I audible? I just want to make sure that I'm very clear.
Uh, I'm struggling to hear you, but I'm coming. Let me take this off. Maybe that's the problem. Can you hear me now, sir?
Yes, I can hear you very well. How about me? Can you hear
Okay,
me?
yes, I can hear you perfectly now.
Very good. Thank you.
Yes, good morning.
Yes, good
In
morning and
your
good
time.
afternoon.
Good afternoon.
Yes,
Yes,
good
good
morning, good
morning,
afternoon.
good afternoon. Thank you so much for doing this with us. On behalf of the Association of African Startups, we want to say a very, very, very big thank you. We have a very, very important guest in our midst today. Thank you so much, sir. But like we said, this is a conversation, so it's more about question and answer kind of thing, because we don't want it to look like just teaching and teaching. So if people have questions, they can drop it in the comment section, and then I'll ask you about it, sir.
Okay,
So our first
absolutely.
question is, what is cluster distribution?
Yeah. No, absolutely. No, thank you very much, Abiola and the team at TAS. And also for those that are online, thank you very much for joining this. So cluster distribution, I think um, in the key sense of it, if we just look at it in terms of what the definition really is on Oxford or any Webster's dictionary, it's just that. It's just when you have a group of people or a group of things that are put together. So there isn't any rhyme or reason as to why those things are put together. It could be because they're in the same state, in the same town, from the same school, whatever it is. That's basically just clustering of people that are close to and things that are close together. That's really what clustering is. That isn't nothing fundamentally different from that. And I think it's important also as we go into this conversation is, and we're talking about startups and we're talking about the fact that we want to maximize resources, the little resources we have, we want to maximize them through profit. That's really the end goal, through profits. And clustering is supposed to help us in
Mm-hmm.
that step moving forward in terms of achieving that, y variable, what I call profit.
Mm.
Yeah,
Thank you so much, sir. I love how you simplified it. It's just bringing things that have like but I don't want to use the word like minds, but like characteristics, like you said, just bringing them together to achieve the purpose. Thank you so much, sir. So our second question is, how can, now that we understand what cluster distribution is, and we're talking about cluster market. So our second question is, how can business owners determine distribution clusters that would enhance product awareness and profitability?
yeah. Thank you. I'd phrase that question a little differently. Um,
Okay.
I would probably say, how can we maximize profitability by deriving better clusters?
Hmm.
Okay.
Love that. Love that.
The reason why I'm saying that is, as I said in my initial question, is we have finite resources. This resource that says that we have as human beings on Earth, at least as far as we know, Earth is very limited. And that's the same thing as startups or any business for that matter. You're only working with so much capital, right? Either in the form of working capital or human capital, whatever. It's just so much. It's just so much. There isn't. You can't go beyond a certain level. And we want to ensure that we are getting profitable results from that. So, as I said before, the clustering is supposed to help us achieve that. So, one of the ways that we can think about, again, there are multiple ways, but I'm just giving the different options that are out there. Is and I'll probably use an example of a business that I'm involved in, which is the consumer packaging goods services, where we supply different types of grain. This is in Kenya that I'm talking about. We supply different type of grain and also coffee, but
Mm-hmm.
it's where do you minimize your costs?
Mm-hmm.
Okay. So in that equation that I just mentioned, profit, and then that's on the left hand side, profit. If you remember in school, we talked about y is equals to a plus b x, etc., 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 etc. Y is your profit. Now the equation on the right hand side is now things such as your cost of goods. Your cost of goods don't change very much, all right, or the fluctuation is fairly determined. But there are certain things that you can control. And some of those things that you can control are some of the indirect expenses or other direct expenses. So, an
Mm-hmm.
example of an other direct expense would be your cost of delivery. So, you want to put your cluster closer to either your production point or your
Mm.
customers. All right.
Wow.
All right. So, that's basically one of the things that, or the two things that should be taken into account. How far you are from your epicenter, and your epicenter could be your production or your epicenter could be your customers. So how do you
Mm-hmm.
minimize that cost on a marginal basis so that you can maximize your profit? That's the way
Mm-hmm.
I would answer that question and rephrase it in terms of how can we maximize profitability by deriving better clusters. And then the question is, how now do we derive better clusters, or clusters that minimize our costs?
Mm. Thank you so much, sir. I love how you simplify these things. Now, because we have initially said that cluster distribution does not necessarily, they just need to have similar characteristics like that to make you want to cluster it. But when you want to use it to enhance profitability, you need to be very strategic about it.
Yes.
right? Like you have said, you when you want to cluster markets, you are looking at, okay, how am I going to do this? So you don't just cluster markets without being strategic about it. And I love that you explain this, right? So this is something that you need to sit down with your strategic team, your market penetration team, to really understand how is this going to be profitable for me. And I would say you have to do a lot of research, because that's one thing that business owners don't like to do. It's so funny, but they don't really like to do it. You need to
Yeah.
do a lot of research, right? A lot of research. So that
Yeah.
means if you want to enter a particular market, maybe you have more markets there, then you might not close your distribution from a particular market and move it there. But you must have done your research. So you see, most times when people say that, oh, they have left a particular country because of this, don't just think sometimes that it's just what you heard. It might be a particular research. Thank you so much, doctor, for explaining that to us. So our next question is, please, if you have questions, right, please drop it.
Sure.
Please drop it if you have questions concerning this, because I want to say this is not a baby topic. Let me use that word. It's a very intellectual topic and really deals with strategy, but it will help you when you want to penetrate markets,
Yeah.
right? So our next question, sir, is what is the difference between market clustering and market segmentation?
Very good. Very, very, very good question. And again, this is where people get confused. And also in the explanation, I need to be very, very clear. As I mentioned before, clustering is just a grouping. It just happened to be there. For example, I'm just going to use now Nigeria as an example, because you're based in Nigeria.
Mhm,
Igbo, Igbo and Yoruba. You can cluster a market based on Igbo or Yoruba, or
mhm,
Enugu or Owerri or Port Harcourt. Those could be clusters. But
mhm,
segmentation is a lot more refined
mhm,
than a cluster. Segmentation, you have a priori, meaning you have something that you actually defined. For example, um, if you're supplying something or you're making whatever industry you are, you may segment a population into high velocity pairs, low velocity pairs, um, luxury spenders versus regular spenders, right?
mhm,
Those are clearly defined definitions or clearly defined populations
mhm,
that you've collected or you know about that you want to target. It's now beyond a cluster. Or it's actually under a
mhm,
cluster. So the cluster is just big people. Like for example, I live in New Jersey, and the place that I live is it's closer to New York, but
mhm,
within that cluster that I live in, you have different people. You have people from East Asia. You have people
mhm,
who are born in the town itself. You have people that work in Manhattan. You have people that work at home, et cetera, et cetera. So the type of product or the type of service that you target towards these people could be different, right?
mhm,
So, for example, if I'm selling food, again, the people from East Asia may be interested in food that have more spices. If I'm selling
mhm,
to people that are, of Italian background, they may want to get more pasta-like food. If I'm selling to people that are going to Manhattan and commuting on a daily basis, they may want something that's fairly quick, like a quick coffee or a donut or whatever. That way, when they're heading into the train, it's easy for them. So the segment is a lot more refined than a cluster, a lot more
mhm,
refined. You have a specific behavior, if I want to put it that way, a specific behavior that you're
mhm,
targeting and you want to make sure that you get.
mhm,
And it requires a lot of data. And that's
mhm,
some of the things that in Africa um, we lack. Um, Data is really really a big challenge, and you've heard about very many companies that have struggled in Africa. For example, Twiga Foods in Kenya. You have Copia also in Kenya. Jumia also had some struggles, but it's not because the business model is a bad business model. It's trying to solve a need, but it's just that ability to be able to get that data to understand the type of customers that you want
mm,
to target. If I
mm,
may, I don't know how much time I have, but you may, if you look at a company like Copia, I don't have all the details with me, but if you look at a company like Copia, it was basically doing what Jumia did, is trying to do the last mile,
mhm,
deliver to consumers the last time by providing credit. But for you to provide credit to off takers, you need to have data in regard to how the off taker is paying. Without that data, it's impossible for you to be successful because you're basically doing things at random. And when you're doing things at random, um, you're not going to succeed.
mm,
That's for the you're not going to succeed. It becomes luck.
mm,
It no longer becomes strategic. It just becomes luck. So those are some
mm,
of the things that end up happening with many of the visions and companies that many companies that start up. Very good idea, um, but the data to be able to support some of the initiatives out there is just lacking. And then at the end of the day, when you have that sort of incident happen, it's very easy to run out of money as a company
mm,
because you end up
mm,
you're basically throwing money, good money after bad money, if you want to put it that way, and you end up
mm,
running out of working capital or capital. Not because the business, again, not because the business idea is bad, not because the strategy to get there was bad, but because you just don't have the data to execute the strategy, and that's where
mm,
segmentation comes in.
mm. Thank you so much, Dr. Akib. For those of us that are just joining in, one of the things we want to discuss this month in TAS is market penetration. So sometimes for your market penetration to be profitable, you might have to cluster markets. This is what we are discussing here. You might have to cluster markets, like he had said. Clustering markets is more about just bringing some markets together that you want to serve, right? And he has also explained that sometimes you want to cluster market based on your customer and your production if you want to enhance profitability. And then now we're talking about differentiating that from market segmentation, because most times just an everyday entrepreneur is used to that word, especially from social media, market segmentation. And now you're hearing market clustering and you're wondering what is the difference. This is why we had that question. Like you said, is more about having to do with the behavior. I just want to please say this, if I got that correctly, that's the last explanation that you said. If I seriously want to go strategic about my market clustering, it will also help me to understand my market segmentation, as it will help me with my clustering so that I am also understanding what I'm doing. Is that right, sir?
Yeah, yeah. Let me rephrase it. Let me phrase it a little differently. That way, at least for the folks that are also joining in, understand. So the cluster is stage one. This is all part of the strategic planning process. The first stage is just your clustering. Clustering is just okay. Where can we go? Let's go to Enugu. Let's go to Port Harcourt. Let's go to Owerri. Let's go to Asaba, Wari, Nairobi, Nakuru, etc., etc. All these places. That's all you're doing. That's clustering, as an example. It's just really broad strokes. Now within Enugu, who are you targeting?
Mm,
Okay, so that's the first one. You just clustered. Those are my clusters. Those towns that I just talked about. Those are my clusters. Now the next section is now, who am I targeting within Enugu? Am I targeting the high spenders? Am I targeting the low spenders? Or high velocity, let me just, not high spender, but high velocity spenders? Am I targeting
mm,
my low velocity spenders? Am I targeting my luxury spenders? Am I targeting my conventional spenders?
mm,
The segment is whatever you want to call it. It really
mm,
all, it's all, and the reason why I call it behavior is because the segment really tells you what behavior these people have and what type of
mm,
behavior you're trying to do. So it goes back to psychology,
mm,
right?
mm,
Human psychology. That's what determines a segment. But that's psychology is for an individual. Now you want to put that for a larger population, which is now sociology. So if you can extrapolate that sort of behavior within maybe one or two people and extrapolate it, or maybe 100 people and extrapolate it into a much larger population, then you have your segments. Okay,
Mm.
so you say so. The first broad stroke is let's determine the clusters, and they
Yeah.
say the clusters. First thing in your clusters is determine that factor. How much profit do I want to get, and how much can I reduce my cost? Okay. Then the
Mm.
second aspect beyond that now is once you determine that cluster is now going into the segment because the segment is now more tactical.
Yes.
Yeah. Yes. So that's basically the way I'd approach it.
Thank you so much, sir, for shedding more light. Like this is good because like this replay or the recording of this is always going to be made available and made public. So it's something that you could always go back to and understand when you want to cluster market. Thank you so much, Dr. Aki, for making this available to African entrepreneurs. Thank
Sure.
you so much.
Sure.
So the next question we have is how can cultural difference affect cluster distribution across the various regions of Africa?
No, that's a very interesting question. It's a very very interesting question. I think the world is becoming global in nature.
Mm-hmm.
And the way business is done is, I'd say it's largely universal. Okay, at
Mm-hmm.
least good business, it's largely universal. Um, so the cultural differences that I see are not necessarily cultural, as you can say, for example, tribal cultural differences and things of that nature. I think the cultural differences come from the way the different economies across the world are
Mm-hmm.
run or
Okay.
are managed. So you have in Africa, for example, 80% of the economy is informal.
Mm-hmm.
In the Western world, 10% of the economy is informal. Depending on which country you're going to, it's 10%. So you almost have a reverse of the two. Okay, so the cultural difference there now goes back, which you talked about, what I was talking about before in terms of segmentation and clustering. That gives you two types of portfolios. All
Mm-hmm.
right, you have the 20%, at least in Africa, you're talking about the 20% formal population, and you got the 80% informal population. So what do you do with the formal population, and what do you do with the informal population? For the formal population, if you have a product, for example, I'm just going to use example again. I'm just going to go back to the example that I know very well because this is what I've worked on. Is when you're trading rice or any grain for that matter, packaged grain. If you try and sell that packaged product into the informal sector, and particularly those in the rural areas, you're unlikely to sell very much. The reason why is because the people in the rural areas are mostly agricultural farmers, small scale agricultural, maybe some large scale, but mostly small scale agricultural farmers.
Mm-hmm.
And their propensity to spend on consumer packaged goods is lower compared
Mm-hmm.
to the other side of the spectrum, which I say the 20%, which is the formal sector, who don't have time for farming or anything of that nature. They might do that as a side hustle when they go to the village. But for the most part, they wake up at 5 o'clock in the morning, depending on which city you live in, get to work by 8 o'clock, and they're back home by 7 o'clock. So for them, consumer packaging goods make a lot more sense. All they have to do is just open it up, pour it into a the stove or a pot into the stove and cook it. Something that doesn't take too long. So that's the way I look at it in terms of cultural differences. It's not necessarily whether you're from a particular ethnicity or not. It's more around what's your socio-economic
Mm-hmm. Your like
spectrum.
your social life more like.
Yeah,
Thank
so,
you so
yeah,
much. Like this really got me thinking that this now is even off the topic. It got me thinking because most times an average African just wants to serve the global market, and then you're being seriously been breeding in an informal sector, and that's why it looks like most times penetrating that market is quite hard because you really don't even know how to serve the formal sector. Thank you so much for even bringing that to light. Thank you. Like
yeah,
your perspective about this is like has even brought out one curiosity in me. Like, okay, if you say you seriously want to serve the global market, how are you going to make your product be more formal for that sector you're trying to serve? And this is one of the things that we also talked about with market segmentation, like we explained earlier. You need to understand, not that, oh, because I'm serving Igbo, I'm serving this, I'm serving that, or I'm serving a South African tribe or maybe Kenyan tribe and all that. You need to go beyond all that. And that's why he said research is very, very, very important. Thank you so
yes,
much for
yeah,
shedding more light on that.
yes,
So you
absolutely,
learned something today, right? The global market you're trying to penetrate seriously deals with the formal sector. How is your product able to penetrate that market?
right,
Even the African market that you're serving, most of you are serving products. You're clustering the rural community, and you're having products that would serve the formal market, and you're trying to be profitable. How would that work? You should
yeah,
thank Dr. Hilary for this. Thank you so much for shedding more light on that. So you need to look at cultural differences, especially when you're clustering markets or you want to penetrate market. So the next question we have is how can clustering help business owners penetrate new markets across Africa?
yeah. Um, I'd say the theme is largely the same here, Abiola, um, because when you talk about how can clustering help um, business owners penetrate new markets, um, first thing again, it's just the first thing is just profitability, right?
Mhm,
Is this area a profitable area? Um, and we talked about that this last topic or the last question we talked about the cultural differences, right? Um, in the formal sector, there's something that you touched upon, and I think you probably said it better than I did. In the formal sector, or you're serving the formal sector, you're talking about branding, okay?
mhm,
So your package has to be really, 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 really good, okay? So, for example, I'll just show you an example of this. This is one of the packages. I don't know if this is visible to anybody. Um, Probably not. But anyway, this is one of the formal packages that we have as a company. And that package really needs to demonstrate what the message that you're getting out.
mhm,
Okay, so identify the market that you want to penetrate to, the classes that you want to penetrate to. Are they the package that cares about this, or are they the package that cares about the brown bag that people just put
mhm,
in, right? That is what drives profitability now. Okay,
mhm.
because making a bag of this nature isn't that cheap. Okay,
Exactly.
now yes, now when you look at the other on the other side is the other informal. I'm just going to call it informal sector.
Mhm,
They probably don't care about the packaging. That's not their forte. They care about what goes into the stomach at the lowest possible price. Um, so you have to look at it from that perspective in terms of how much am I willing to sacrifice in terms of margin, or how long am I willing to wait in terms of margin. The other thing that I think, I believe this is the same across Africa, but I do know in East Africa it's the same way. Um, is that in the formal sector, money moves fast. In the informal sector, money moves faster.
Oh wow.
All right. In other words, the quantities are smaller, but people pay cash. That
Mm-hmm.
cash comes back to you. You can go back, purchase your goods, and supply or service the customers. The money moves much faster. But in the formal sector, money moves slower. There's a lot more data, but it moves a lot slower. That's where you have the big supermarkets, the big supermarkets that are constantly asking about 45-day terms, 60-day terms. So imagine supplying to a place, you wait for 60 days versus a place where you're getting money quickly, coming in quickly, right? So those are some of the dynamics that you want to be able to get to. But there are also trade-offs in that. Again, everything's a trade-off. They're never really solutions. At least I'm not a believer in solutions. I believe in choices, and each choice has a pro and a con, and each choice isn't necessarily right. Okay, so when you look at that, you just have to do your trade-offs, and this is where your financial advisor or somebody in finance within the organization comes in and puts out the cash projections for you to determine whether choice A is better than choice B, better than choice C. So you have to try those different choices given the different clusters, different markets that you have. All right. And even beyond that, and when you start getting sophisticated, you start looking at different segments to be able to determine this is a niche that I want to go to. Right. So that's essentially the way I'd look at it. And if I just may add one more thing, we always wonder why when you look at like a vehicle like a Bugatti, there are probably about 120 Bugattis in the world. Okay, 120 Bugattis. If you compare that to any Toyota, like a Toyota Corolla or whatever Toyota, you talk about millions and millions of Toyota Corollas. But a Bugatti they only make about maybe two or three in a year at most. Um, they've identified not a cluster, but they've identified a segment that they're going for. Right. So those are some of the things that it's not an easy exercise to do. It requires a lot of data. It requires a lot of effort, and data and effort is expensive. So people try to sneak around expensive, but it's something that has to be done. If you want the truth, you have to work hard to get the truth. And that's one of the things that I always advocate is data, and always get the truth to be able to
Thank
to make the right decisions. Yep.
Thank you so much, Dr. Akib. I feel that we are going to still be seeing more of you because this formal and informal sector it just brought like a light bulb with me because the truth is most African countries, I'm sorry, business owners want to penetrate these markets. They don't understand these things. And then we're looking at how to build tasks like an hub to help, right? So you can have some of these consultants work with you for some of these things. So is this something in the long term vision for us to do? And I know that we are going to have you on board for it because you have lots of wealth of experience on this, and then you're the financial guru. You know how to move these things. And thank you so much, sir, for even enlightening us with this little time, making us understand these things because it's very, very important. Most times people don't really understand these things and they just venture into these markets and they are thinking, oh, why did I do this? Why did I not do this? And they don't understand why. Like you said, it might not be the business model that might be the problem. You have not just done enough research to know what to pick and what financial risk you are able to take at that particular time.
That
Sometimes
is,
you might not be able to take that financial risk at that time, maybe later. Like you see, sometimes we'll tell you in the future, this is something we are doing. Because it's probably maybe at this time we might not be able to take that risk. It happens. That does not mean you are not going to do it, but you have to be very strategic in these things like that.
yeah,
Enlighten those today. Thank you. Thank you so much, sir. One other thing I would have loved to say is that you see the way he explained with so many products, and I would say that for some products, like let me use Coca-Cola, Fanta, and the rest. You see that some packaging in some clusters are different from some packaging in some other areas. This is, you see, he just explained that today too. That you need to be very strategic about how you penetrate markets and how you cluster these things. If you have questions, please drop it. Please drop it. The replay is going to be available, so you can always go back and watch it, and seriously understand this. Thank you so much, sir. The last question is more, it's not really like a question, it's more like um an advice. What kind of advice do you have for business owners generally as a finance expert and pro?
yeah, yeah. No, no, thank you. Um, yes, I think a lot of it will also come from my experience. Take your time. We get too hungry very fast, and
Mm-hmm.
we tend to have very big eyeballs that we want to change the world, which is good. It's good to change the world, but I think take your time, go slow, um,
Mm-hmm.
do your analysis. I mean, this is advice that's always given to people. Abiola just said it. Do you take your time? Do you do your research, etc. And then also be very careful in terms of who you bring into your business. We all have business partners. We all have friends. We all have people that come to us as intended business partners. Take your time, as I say, just take your time, grow your own business, understand your business, make sure that you understand the ins and outs from point A to point Z. Be very, very detailed in that. Once you understand that, then think about scaling. You don't
Mm-hmm.
want to scale without understanding that. And I think this is probably one of the biggest issues, as I say, that has happened in many startups. At least the case studies that I've read and things that I've read through is it's again, it's not the business model. And when you bring in, for example, outside investors, um, the intention is not the same as yours in most cases, right? Like private equity may have a different intention than yours because they may think about a return in 12 months, 24 months. You may think about this from a 20-year horizon, right? So matching the funding that you get with your strategy is very, very important, right?
Mm-hmm.
And use the little capital that you have to do what you can, understand what you can, and then move from there. Because what happens is, and I hear a lot of economists, a lot of finance people talk about, oh, private equity is really controlling like a lot of America and it's making companies fail. That's not really true. I think and I'm talking about America, and I think the same across Africa as well. That's not really true. It's not that private equity is taking advantage. What private equity does is they come in and look at a problem that is very difficult that people are not willing to take, and they invest in that. And but as I said, they come in with a specific agenda. And if the agenda is not aligned with your agenda, and they'll not tell you what the agenda is. I think
Mm-hmm.
that's for you to, at least I'm telling you right now, that's for you to be able to figure out what their agenda is. Um, and once you understand that agenda, um, is it aligned with what you as an entrepreneur are looking for?
Mm-hmm.
If it's not aligned with what you're looking for, just hold off. The world is not ending.
Mm-hmm.
Just because you're not getting funding today or tomorrow does not mean that somebody is going to die. It really does not mean that. It just means that your objectives are delayed a little bit. But at the same time, you get to learn. But at the same time, I also say is that it's always good to have outside expertise. And this outside expertise actually comes sometimes from a lot of this private equity and other funders, because they bring in some discipline that you may not need. Oh, sorry, you may
Mm-hmm.
not have. Sorry, not need. You may not have. So it's always good to be open and listen to some of these things. You may think you're an expert
Mm-hmm.
in everything or in many things, but when you get into the entrepreneurial world and start running a business, you'd realize that you don't know a lot of things. Um,
Exactly.
and you actually look like the child in there. And in some cases, you actually feel like a fool because the decisions that you're making, you ask yourself, how did I even make that decision? How did I even do that? And I mean, and you have to take responsibility. You have to take responsibility, because at the end of the day, it's you. Again, it's all set up differently in different organizations, but at the end of the day, as an entrepreneur, everything stops with you. So you have to take all responsibility. It doesn't matter what any of your business partners will say. It doesn't matter what your wife says. It doesn't matter who out there says. The decision that is out there is your decision, not
Mm,
anybody else's decision. It's your decision, and you have to stand by it, whether it's wrong or it's right. But there are no wrong decisions.
mm,
You just make a decision, you move with it, and you can always pivot. And
mm,
to that last piece, I'd also like to point out that, and I appreciate what you did at the beginning in terms of prayer. Um, but in this world, life is a probability. That's my strong belief. Everything that you do is a probability. In this, it comes down to probability. You have a choice.
mhm,
I had a choice to take this webinar, and I also had a choice not to take this webinar. That was a choice. I decided to take this webinar. Now, what happens afterwards after this webinar, I don't know. But there's going to be
mhm,
another choice. But it's led me to a different path. Same thing to you, Abiola, and all everybody else that has joined this webinar, or at least gets an opportunity to listen to it. We all have a choice. We can either go left or right. And each of those choices lead us to a certain path. So it's all about understanding that, and you can never predict the future, but at least when you get to a certain point, have as much information, have as much data around your segment, your clusters, everybody around you, so that you can make the right choice when the choice comes into play. Okay, that's basically the probably the three
thank
things I'd say.
you. Thank you so much. I love this word of advice that you gave, because most times we have seen most entrepreneurs feel like they know it all. They know it all, and then you have people on social media telling them you don't need to join the class, you don't need to do this, you don't need to do that. And then most times the question is, how then would you build on what you think you know? Um how then would you build on what you think you know? I'm trying to see whether this is a question. Thank you, Dr. Akib. I love your point about being open to business partners and understanding that there are gaps within one's businesses that can be filled with experts outside the organization. Thank you so much, ma'am, for sharing that. Thank you. Thank you. If you have questions, please drop in before we release him, because it's quite early at his own time. They joined us all the way from the United States. Thank you so much, sir. Like it's really important that people understand these things, because they just feel they know it all, and you can't know it all. Like he has said, you keep one choice will lead you to learn something, another choice will lead you to learn something. Like now, this formal and informal sector that I learned today, now I'm very curious about it, right? And at a point, like you said, sometimes you look like you're a fool, and then I'm sitting there and I'm thinking like, oh Yola, but you run operations for an organization. Why is this still looking like this is the first time you heard it
Yeah,
today? But
yeah.
he said it in a different light. And then I'm like, okay, oh wow, oh wow, oh wow. And I'm like, okay, oh wow. So even if you want people to do this, learn about penetrating market, they have to learn about this and all that. I'm like, okay, that's fine. Thank you so much, sir. Thank you so much, sir. I
Thank,
don't think people have questions because she's simplified it. You really did simplify the conversation today. Thank you. So if there are no more questions on behalf of the Association of African Startups, I want to say a very, very, very big thank you. I can guarantee you will hear from us, like I said earlier, about the things we want to do and we have plans to do, about making it more like a hub so that you have some of these experts with you to help you build. And like there's another thing again I want to point out. Like you said, don't be in a hurry. Don't be in a hurry. This business, if you want this business to outlive you, if you are the startup, if you are starting it, you need to build the right foundation. So stop being in a hurry and make mistakes that your businesses cannot seriously recover from. So yeah, those are some of the things we want to do, teach people how to build businesses that would outlive them so that we can seriously grow our GDP in Africa. So yes, we are going to definitely hear from us once more. Thank you so much. Thank you. Thank you so much, sir. Have a great, great, great day.
thank you very much, and thank you for the audience, and I appreciate the opportunity.
Thank you, sir.
All right.
Yes, I hope we learned something today. We'll be teaching market penetration in November. So please, you can join us. You can join us. You can join us and be part of TAS at www.tasafrica.org. Search registration and be part of it. We bring faculty members come teach you these things, and we bring faculty members that know their onions. We don't just bring people that just um want to talk. There are some people that just want to build their career by talking. We don't just bring people like that. There's a lot of selection process that goes on in it. We bring people that are genuinely concerned about your growth, genuinely concerned about your development. So please be part of task if you're not yet a part of task. So yes, thank you so much. Until see you next month for our last conversation in the year 2024. Thank you. And
Thank you.
have a great, great day. Bye, sir. And
Thank you.
bye, everyone.
Thank you.